Vitale American Retirement Advisors with the Gradient Investments weekly market update for the week ending October 6, 2023. Let's get into stocks. Equities were mixed in the U.S. last week with the benchmark S&P 500 up 0.52%. The Russell 2000 was down 2.19%, and the NASDAQ was up 1.62%. Now, after the labor data provided more evidence the labor market remains strong in the face of restrictive monetary policy, that's kind of what happened. And this kind of mixed, so it's kind of weird when you look at it to see how it reacts. But overseas, the developed markets was down 1.85%, while the emerging markets declined 1.61%. Within the U.S., the best performing sectors were communication services and technologies, while energy and consumer staples were the laggards. By style, growth outperformed value, and large caps outperformed small caps. Goes back and forth every week, which is why we have to be diversified. The attack on Israel and subsequent retaliation on Palestine over the weekend is expected to change investors' focus in the coming days, and we're seeing in the news today and what's happening that Israel is going full force at them. So we're going to see how that affects everything as time will tell. Let's talk about fixed income. Yields rose last week, setting 16-year highs across the 2-year and 10-year and 30-year maturities for government issues on Tuesday. At this week's end, the benchmark 10-year Treasury stood at 4.78%, which is a gain of 19 basis points for the week. Let's talk about commodities. The price of West Texas crude dropped 8.81% last week to $82.79 per barrel. This was the largest weekly drop since March and reflects the government's report of a large buildup in gasoline inventories and weak gasoline demand. Not sure about that, but we'll get into that. Additionally, concerns about economic growth in the U.S. and Europe contributed to weaker oil prices. Yes, could this thing in Israel, this war there, could that affect it? Absolutely. We'll see how that unfolds as time goes on. Let's talk about economic data. Non-farm payrolls rose 336,000 in September after a net upward revision of 119,000 to the prior 2 months. September level more than doubled the consensus estimate of 160,000 increase, and private payrolls were up 263,000 in September, led by leisure and hospitality, and government jobs contributed another 73,000. The unemployment rate remains at 3.8%, and wages were up 0.2% in September versus August, and the year-over-year rate was up 4.2%, and the market liked that, which is why the jobs report made it go down, but then the wage increase made it go up. Okay, the service index declined 0.9%, 0.9 points in September to 53.6. This indicates that the services sector continues to grow, albeit at a slower rate, and the sector has grown in 39 of the past 40 months. Now, notably, prices were flat. Meanwhile, a manufacturing index rose 1.4 points to 49 in September versus August, and any reading below 50 indicates contraction, and supply deliveries were notably faster and prices declined. Let's get into some company news. Advanced Micro Devices, which is AMD, Alphabet, which is Google, Meta, Facebook, NVIDIA, Palo Alto Networks, all holdings of Core Select and G33 strategies rose 4.3% to 5.23% last week on rising expectations for strong quarterly revenues and earnings reports, which is coming out this next week and you're going to see a lot of earnings coming out. This growth is based on progress in artificial intelligence and stabilizing technology spending. You see a lot of AI, of course, in the news right now. And CME Group, which is a G50 holding, rose 5.85% last week after the exchange operator and financial risk management company reported average daily volume was in second highest on record for both month and September and its third quarter. So pretty good. This concludes our market update. Thank you so much for being part of the ARA family. If you'd like to get a hold of us, give us a call at 855-756-5700. Visit us at aradvisorsinc.com. Now, of course, is the time for Roth conversions and is the time to look at end of the year, making sure we're maximizing the tax brackets so that we're in good shape. So that's it. God bless you. Looking forward to seeing you again next time.